Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Tuesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing Monday as we kicked off the week in style with a little bit of a pullback in the markets overall. And we saw a little bit of the S&P coming down, but maybe there's a chance to rejoin the trend. So let's dive right in. For those of you new to the channel, do me a favor, click the subscribe button down below, hit the notification bell so that you get the alerts as they happen. So let's go ahead and dive in. All right, S&P down 11 points this morning. We are actually hit a little bit of a demand level on our 15-minute chart. Remember, it's a 15-minute level. So we got a nice move into the level, and then 1, 2, 3, 4, 5, 6 candles into it, nothing had happened. So in reality, this is just essentially one of those ones where you follow the 6-candle rule. You may or may not have gotten stopped out. It went below by about 2 ticks. So in reality, that's probably a little bit too tight of a stop, for that particular trade. We were looking at possibly placing our stop way down here in the live trade room the other day. But now what I'm starting to see here is we're actually getting a little bit of strength, building a little bit of a bottom here, and could have a little bit of a reversal coming soon. We're coming close to our hourly area, which was in the past an area of supply. If price goes through there, price went through there, but we left it on because old supply often becomes new demand. But I want to take a look at our momentum falling to the downside. When I look at my downside momentum, I am, I guess we've not quite seen a momentum rollover yet, but I'm starting to lose a bit of momentum to this downside. So, which coming into a potential area of demand could make for a good buying opportunity. So keep an eye out for good buying opportunities, which is really what I think we're setting up for, somewhere down in this region in here. Overall, I think that if I look at the 4-hour chart, we'll be able to see that this is just a nice healthy pullback to an area where it could be a good area to step in and be a buyer. This is a fair price value area right in here, a former all-time high that we just slightly got over the top before getting a little bit of a pullback. Now, if you do want to take advantage of the next kind of leg down, where might you get a shot to do that? Well, I've got to really look inside of here. I've got an area that could possibly work there, but my feeling is that if we make it up through that region, then there's room for price to, if we make it above this wick, there's room for price to continue to run a bit higher because this is an 8:45 area. It's not a great time of the day zone. So there's a chance actually that if we base below here, got to get the basing in front of the level, that you'll get a little bit of a pop higher. So if we don't make it all the way down to there, and really what I'm essentially looking at here is a very small time frame double bottom, right? Small time frame double bottom. Remember that a double bottom, you should have kind of a crooked looking W, which is exactly what we see here, is this crooked looking W. If we base in front of here and we get a little bit of a pop-up, I think you could get a little run. So all in all, I'm still overall generally bullish. There's no reason not to be. My 4 hours just telling me that I'm on a bit of a pullback. NASDAQ. So looking at the NASDAQ next. Now the NASDAQ supply level, same exact kind of area, not as clean as the demand level on the S&P, but still another potential reversal point somewhere down in here. Now, if we do get a rally up on the supply level, the NASDAQ supply level up here is a little bit cleaner than the S&P's supply level was. Now, my only issue with this is the time of day that it was formed. It's a very poor time of day for forming, so it may be tough to get much of a reversal outside of that level. Next, crude oil. So crude oil, we've just been in between our levels of demand and supply. Not a whole lot happening here. There's really, in my mind, no reason to take anything until we get to a potential reversal point. We added this 15-minute one yesterday just in case we got down to that region. We were unable to do so. Remember that this is a confirmation long up here, or confirmation short, so price has to come in and you get short as it comes out, especially since we came kind of close to it yesterday without able to get filled. In gold, we are still sitting above our potential breakout to the downside. I am somewhat interested in this level here for gold as a potential reversal. If price comes back into this region, this occurred right at about midnight. It's a little bit of a retest of this intraday area. So if you want to be a little bit more conservative, you could wait for this wick over wick area that looks like it may happen right up in here. Next, let's go take a look at our bonds and currency markets. So the first one is the ZN, which is our 10-year Treasury note. So looking here at our 10-year, we have come back to our 10-year level. This 10-year level that we've made it back to, we came into that in the overnight sessions. We've been 3 candles and not a whole lot has happened. And I've got a fair price value area right above me, right in here. So not sure that level's going to be an excellent level for us to take a trade off of. But if you're in it, then certainly you want to take your stop, maybe protect your monies already, as it's not really moving the way that we would want it to move, and we're already 4 candles in. So 1, 2, 3, 4th candle. So 5, 6 doesn't look like we're going to get much more of a movement off of that thing from where it is. So I'm going to take this level for now and remove it, as I don't think that we'll get a huge move off of that level from this point. Next, the Aussie. So in the Aussie, yesterday we had a little bit of a breakdown in the Aussie position. So the Aussie broke down and it's come into our opposing demand level. So leave me a comment down below if you took our Aussie trade. We talked about this little breakdown point from here. We got a really nice move away, moved our stop down, didn't touch our stop, and then continued down to hit the rest of our targets. So once again, leave me a comment in the comment section below if you were able to catch this from yesterday's daily market commentary. But now I need to remove all of these lines as we are now back into this area of demand. Now, much like the bonds, 1 candle, 2, 3, 4, and not a whole lot's happening. So I think we're going to wind up getting to candles 5 and 6 with not a whole lot happening either. If we do get a move away, then you've got opposing supply right up here. So if indeed we do get a move away, that's your opposing supply level would be right up in there. For now, I'm going to remove this zone. Next would be the euro. So the euro also gave us a little bit of a breakdown from from this level that we talked about yesterday, this little bit of a bear flag pattern. We got a little bit of a breakdown that came through here. So now that we've gotten that breakdown, price is coming closer to the next area that we talked about yesterday. So if I look at that on a 4-hour chart, you'll see this is our price targets for the breakdown. We're just about to the first target on this breakdown. So if you did take this breakdown, I think it's a decent opportunity now to take your stop and move it down just above this last speed candle. That would lock in just a little bit of profit without having to take on any additional risk. We don't have any quality demand until all the way down in here, so there is actually room for price to run a bit further. So if you catch target 1, just let me know. So that's 2 decent breakout trades between the euro and the Aussie. Let us know in the comment section below if you're able to nab any one of those. Canadian dollar. So the Canadian dollar, we had our level right back up in here, which was our confirmation short. Price moved off of that level really well after a touch and go. We almost came back into it a second time, was unable to get anything of a fill. And so now as I look, I've got to look a bit lower for a potential re-entry. When I go to the 4-hour chart, though, my definitive trend direction just isn't there. I don't have a definitive trend direction right now in the Canadian dollar, which tells me which trend to really lean on and follow. So remember that when there's no definitive trend direction, your probabilities are always going to be slightly lower. So with that slightly lower probability, I might want to, be a little bit more cautious on any sort of reversal entries. But for the sake of today, we're going to look at this area right here, just above those last two speed candles. You may get a little reversal out of that zone. Let's move over to the Great British Pound and the Japanese Yen as our final two markets for the day. Great British Pound, we had a really, really nice reversal level identified, picked. I mean, something that was just gorgeous. And then the market came super close to it and didn't get filled. And so we saw a pretty strong move away. Now, if I cut this down to a 15-minute chart, there's actually a really clean area for re-entry right in here. If indeed we do get a rally back up to that region. Not sure we're going to get that rally back up to that region today, just simply because if we continue with our general trend direction, then we may not get that. Remember that anything that we do on a long is going to be lower probability since our 4-hour chart is in a definitive downward trend. We're looking for rallies up to supply as an opportunity to get short on here, or some breakdowns, right? Some of you may have taken a breakdown position in the pound. And then in the yen, very similar looking trade where we'd have to look a bit higher for some supply as a reason to get in. Right now, I would say that level, we keep looking higher to supply to get in, but those supply levels are so well respected that they're not getting touched. And so you may be better off taking a breakdown on a smaller time frame when price gets there. So overall, could be one of those days where we finally break out of some of these tighter ranges in crude oil and in the S&P and in gold. But make sure that you follow your plan. I'm still overall net bullish in the S&P. There's no reason not to be. We are still overall moving higher, although we are definitely showing weakness in that upward trend. I think that really, when I look at this on a daily chart, that's a very nice, normal, healthy pullback for a next leg higher. So I wouldn't be surprised to see a next leg higher coming in this S&P level. So that's all I have for today. If you guys have any questions, please send us email support@tradersarmy.com. I will talk to you soon.